Stavros Tousios for M4Markets, and welcome to this first video for the week. And we're going to have a look at GBPUSD and also, what was the other one? Dollar against the Canadian dollar. When it comes to the pound, we actually have a divergence over here, along with a rejection at the bottom of the channel. Okay, of course that follows a much stronger move to the downside here, or a much stronger signal from the RSI to the downside, to be more precise. And also along with this divergence, we also see a smaller divergence over here. Both of them suggest upside bias. And when we see two divergences, one after the other, we know that this is a major signal. Now, here's what else is going on here. We are below the 23, okay? And as long as we remain below the 23, and regardless of these signals, the situation, it's looking a bit more biased to the downside rather than anything else, even maybe perhaps in the short term. But we cannot ignore the wedge that we see over here. And this is a leading price action wedge. Typically, after this sort of completion, we see deep corrections, which also supports the case of a double RSI divergence to the upside. So if indeed we manage to break the 23%, we could be heading anywhere between the 38 and 62, perhaps even deeper, which opens the door or exposes, I would say, 125 and all the way up to 126, maybe 126.20. But if we do lose the low, then most likely we're going to see a bounce a little bit lower with 123.48 below the 124 handle, and a potential bounce after. But then it's going to be harder to get to higher levels because it will be harder to get an actual return within this base channel. We are now flirting with that channel as well, the bottom end of it at least, and a break to the downside here will probably send the pounds to lower territories here, based on the correction, of course, that we're going to have going up if we do go up. When it comes to the loonie, we cannot ignore that there has been some sort of consolidation here, okay, in the medium term, let's say, over here and over here. But equally, what we cannot ignore is that, fractally speaking, we have the same sort of pattern over here as well. It looks triangular and it looks symmetrical. And also, it comes at the right point. As we have mentioned before many times, markets typically move in 5 waves when there is a trend, at least, to be set. So if this is not a correction going up, which means we could continue lower, then there is high likelihood that this turns into an actual triangle. And triangles often break towards the direction of the prevailing trend, and this is up now. What else also is happening with triangles is that we typically see the measured move being actually pretty much exactly the same as the length of the opening of this triangle. Now the 100% brings us up to 136.70, which is very close to 136.80, which is very close to the previous high. Okay, so what I did here is the measured move, right? We're taking this length and we add it to the breakout point, or to the assumed breakout point, and then we measure that. Now, let's not forget, if this is A and B and C and D and E, it means that the triangle is finished, we go straight up. To me, it doesn't look like that's the case. To me, it looks like more of a case that this is A and B, and perhaps we're going to see C here, then D and E. So I think we're going to stay a little bit longer here, although I'm not going to like it too much, because if we compare the correction over here and the correction over here, they're not that much synced. Let's not forget, we have to be very cautious because this move to the downside might as well just be a correction, right? An impulse, and that the correction, which means we're going to go lower down. So the game is going to be played below 134 or above 135.68, because we don't see any signals on the RSI. All we see is symmetrical consolidation, which means that once we get to an apex and a level where there's going to be enough congestion, we're probably going to see a breakout.